Hey, welcome to the Guarantee Retirement Guys show. My name's John Stevenson, and I want to talk to you about the importance of using annuities and also the death benefits that are available in annuities for your retirement and your financial planning. So a lot of times when we're thinking about annuities, we want growth, we want income, and we're thinking about what we want for our immediate needs and, of course, during our retirement when we are alive. But I also meet with a lot of people that want to leave money to their kids, maybe their grandkids, and they're thinking, is there a way that I can leverage an annuity to provide death benefits, a legacy for my kids, for my grandkids? I want to be able to protect it from some market risk, but I also want some growth. And you absolutely can do that. I mean, you've got different annuities out there. You've got fixed annuities, which are paying fixed rates, and those are fixed for a certain term. And if, right now they're pretty high, but in the last 10 years they haven't been as high as they are right now. I mean they're around 5 or 6% right now. Before they were like 2%. So big difference on those. So if you're looking for something for legacy, usually an index annuity with a decent participation rate in the index or a high cap will do the job for you. And of course, it will protect your money from a market downturn. And the nice thing about annuities is they also are protected from creditors and liens. So if you're thinking about putting something that has a little bit more safety, I love annuities for that reason, because you can put money in a CD and that is not protected from creditors and liens. So definitely recommend annuity when you're looking to protect it from those that are trying to get it from you. I'm going to share my screen and I'm going to show you some annuities, and I'm going to show you how these can be leveraged to provide a lot of death benefits. Okay. All right. So you'll notice what I did is I just put $500,000 and I stretched the start income age out to 84 because I'm not using this for income. So I just stretched it out so I can see, all right, what's available. I don't want any income rider fees. I don't want to be charged anything. I just want to have growth. Okay. It'll give me income if I need it, right? I mean, that's a nice little something to fall back on, but that's not what I'm doing it for. And so you'll notice that there's some different opportunities here. So the first one is North American. Then we've got, in fact, we got a few North Americans down. We've got some Allianz. Then we got Nationwide. And if I go to the next page, I'll show you some more. But let's just look at these right now. So we'll look at North American. And of course, any annuity value, usually, as far as a death benefit, it's always the account value. But if you can get more out of it, great. All right, so let's see what we can get out of this. And they show you two things. You'll notice in all of my illustrations that I show, I'm always showing guaranteed versus hypothetical. I mean, guaranteed is, well, if the market doesn't do anything, we don't make any money, right? So they just, they show that contract value staying the same. And then they show you, hey, if you do need income, you can see the available lifetime withdrawal column right here, which is nice. I mean, it's a little something to fall back. It's not great income. I mean, you can get a whole lot more income from other products, but we're not doing that for this, okay? You notice here there's a minimum guaranteed value. That's pretty nice. So even if the stock market does nothing, this index earns nothing, and this is tied to the S&P 500, then you're still going to have a guaranteed minimum value that goes up. Pretty nice. And so by the time you're, look at this. By the time you are 84, you could take $43,000 a year if you want, which is super low income, by the way. I mean, if you want this for income, we need to have a different conversation because there's annuities that'll give you way more than this, okay? But we're not talking about income, we're talking about death benefits, okay? So this is not the annuity for income, although income can be something to fall back. But again, this is also the guaranteed side, which means it's showing what happens if this earns nothing, which is a very extreme example. But here's what I like. You got the death benefit right here, and you got the death benefit paid over 5 years. So, which is pretty cool. So you notice the death benefit here is still $500,000 no matter what. It's the account value, unless, of course, you start taking income later on. But you can see during this time, the death benefit goes higher than that if you pass away and your beneficiaries want to take it out over a 5-year period. The insurance company will actually pay them more. All right, let's look at actually what this will do. Let's not look at the worst case where this doesn't earn anything. Let's look at average growth, okay? 7.75% over the last 10 years, and then it reverts back to the 30-year average of 5.36. So with that, you get a pretty sizable account growth. I mean, by the time you're in your 80s, it's worth $1.7 million. That's not bad. You might be able to make more than that in the stock market. You probably will, but you don't have to ride the stock market roller coaster in this account. If the market goes down one year, your account sits there. It retains all of its earnings, all of its growth, and the principal balance, and it just waits for the next upswing. So it's pretty nice. Here's what I like though. If this has this kind of growth, which is not a lot, but if it does, check this out. You notice the income level? See right here? $393,000 in guaranteed income if you decided to take it. I know you're not planning on taking it, but I just wanted to point that out because that's pretty cool. And you'll notice if you take it earlier, let's say you took it at 70, you change your mind, you don't want to leave this for inheritance, $76,000, $76,777 at age 70. And then you can see with each passing year that guaranteed income is higher. And that's just if you were to take income at that age, that's where it locks in at, and it gives you that income for the rest of your life. Okay. But we're talking about death benefits, right? So let's look at the death benefits. All right. So here is the death benefit lump sum column. Do you see that column, how that is growing? It is exactly the same as the account value, which is great. I mean, if you pass away and your kids want the money, then they're going to, they'll pull out, let's say $1 million. I mean, what is that at age 73? Okay. So they'll take out $1 million, but look at this. If they elect to take it out over 5 years, they're going to take $2,060,000 over a 5-year period. That's pretty good leverage for $500,000. You're leaving $2 million into death benefit. And so the reason why I bring this up is because I have clients that reach out to me and they're like, I want lots of guaranteed income and I've built my portfolio up to, let's say, $2 million and I need $1 million for myself. I want to have as much income as I possibly can for myself. And this is going to bridge the gap. We've got Social Security, we got pension, and then this $1 million is going to give me lots of guaranteed income. Maybe you're getting 60 or 70 grand a year from that $1 million. Okay, so we're going to set that up. You've got guaranteed income. It's great. But now you're thinking, but I would like to leave some money to my kids. And it would be nice to be able to leave them a leveraged amount, right? I would like to use a certain amount and know that that's going to grow to a much higher amount for them. And I don't want any market risk. So let's say you've got $2 million, you use $1 million, you put it into your annuity contract for yourself. So you've got lots of guaranteed income coming for yourself, but now you got another $1 million left. Now you don't want to take all of that and put it in annuities. So let's say you leave $500,000 on the sidelines. You want cash, you want savings. That's exactly what you should at least have that. And so what we would do is we take the other $500,000 and we put it in something like this. And now you can leave your kids a whole lot more. Your $500,000 is going to grow exponentially to, you can see at this point, it's growing to $2 million. And your kids are smart, so they're going to take it over 5 years. They're not going to take $1 million. They're going to tell the insurance company, no, we're going to take option B, and we're going to take $2 million over 5 years. So it's a great deal. Now, that is North American. Let's take a look at Allianz. Allianz, another great company. They've been around for a long time, and they are A+ rated. They've got about $1 trillion in assets backing them. They're actually the largest life insurance company in the world. Okay, so again, you'll notice it's the same exact thing. They'll show you guaranteed values. Worst case scenario, the index earns nothing, and there's no growth. And you can see available lifetime withdrawal as far as the income, all that good stuff. You notice the death benefit paid over 5 years is a little bit higher than North American, which is pretty nice. It's $700,000 if you take it out over 5 years, and that actually starts right in the beginning. So, but again, this is extreme. This is showing you no growth whatsoever. And this annuity, Allianz 222, has actually had some decent growth over the last several years. It's done quite well. So let's look at the average growth. You notice the average growth. Let's see. Let's say by the time you're 84, it's about $1.2 million. Now, you notice the annualized withdrawals, if you were to take income at that point, is a lot lower than North American. It's $152,000. I guess that's what you can do when you're the biggest. But they don't feel like they have to give you as much guaranteed income. So, looks like if you want something that can give you a higher potential guaranteed income, probably North American would be the way to go. Okay, so let's look at the death benefit, though. Okay, so death benefit... Now this is not bad. I like the death benefit here. I would say just as much as North American, because you can see for $1 million, $1,023,000, and what age is that? That's okay. So you're 79 years old. It's worth $1 million, and if you take it out over 5 years, they're going to give you over $2 million. So very similar to North American as far as that's concerned. Now, let's look at the allocations. Okay, right now, we've got it in S&P 500 point-to-point cap. It's capped at 5.25%. Okay. Well, let's put 50% in the 1 year Bloomberg. It's giving us 110% par rate right now. And then we'll just put 50% here in the 2-year S&P 500 futures. Okay. That's giving us a pretty decent par rate. Now, remember, par rates change all the time. And so that's why we just got to monitor this each year and reallocate if you have to. Okay, so let's look at this. See exactly what this would give us with better growth rates. Okay, so yeah, some of these numbers are kind of big. I mean, 25%, maybe. I mean, there are some years, yes, I guess index annuities do get double digits, but I don't like illustrating this because it's a sales gimmick to try to get people into buy an annuity. It does happen, and a lot of these are more. You can see some of these numbers are a lot more realistic. But just fair warning. There's a lot of guys out there that will just promise this, and it might happen. It has happened, but I like to err on the conservative side. Okay, so by the time you are 83 years old, it's grown to almost $2 million with better growth. You notice the annual withdrawals, the annual guaranteed income. If you were to take it, it's like $426,000. So that's not bad. And then you'll notice at age 83, if you were to take a death benefit, so lump sum, it's grown a lot. Your kids take out $2.5 million and they spend it. Or because your kids are smart, they're going to take out the 5-year death benefit option, which is $7 million. Wow, $7 million from $500,000 initial investment. If you're looking for something that can give you a great death benefit, great legacy for your kids, this might be something to take a look at. So anyways, I hope that helps. If you want to subscribe, please hit the subscribe button. Would love to share more videos with you. And of course, if you have any comments, make sure you do them below this video. And then there is a link also if you want to get in my calendar and you want to chat about your annuity needs. Maybe you're looking for income. Maybe you're looking for legacy, death benefits. Let's take a look at them together. So I am an annuity expert all over the U.S. I work with people everywhere. I would love to help you get the best annuity out there. I mean, I don't have any preference as far as trying to show you any one company, where they'll pay me more commissions so I can sell more of that. There's a lot of agents out there that would do that, but I think it's better to be transparent. Just show you everything that's there and then explain this one does this one does this, and here are the pros and cons. And then, at that point you can decide, and at least you can decide knowing that you are well informed. So, all right, hope that helps, and we'll see you in the next video.